traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let me grab the bias chart here. I'm going to go ahead and get that up, and we're going to start analyzing, starting with the euro dollar as we always do. So here's the euro, and you can see the euro is already slipping towards. I have to figure out where that trend line support is. It's got to be coming up real soon. Let me remove the 200 period moving average. You know, the euro. I was playing to the short side on Friday. You know, did really well with playing dollar longs, but I closed out of everything on Friday. So minus the Swissy. You know, Swissy's the only one I kept. But as you can see, the euro's going to be approaching some really key support down here. We have a spike low that comes in around 112.10. That 112.10 is probably going to offer some really great support for you if you want to be on the long side. You know, I don't agree with it. You know, about being on the long side down here, but this is a good bounce area, and you can see we're approaching. Even if you just look at the 618 here, let's go right down to the 618. It'll come in at 112. Basically 1230. It's going to be the 618. We got a spike low just below that at 112.13. You can see all of this previous resistance right through here. That all will matter, okay? So for those of you that want to be on the long side of the euro, I'd probably wait a little bit, maybe about another 25 pips or so. That seems like the logical place to be on the long side if you want to be. But I'm going to write down support as, we're going to write it down as 112.25 roughly. It's kind of in between the 618 and maybe that spike low there. But 112.25. You know, remember, it doesn't have to be on the number specifically. It's just really close to that. That's where if I wanted to be on the long side, I would do it there. All right. That's not the trade that I want to take. You know, I'd rather short a rally, but you know, the question is how far are we going to rally now? That's the questionable part. Let's go over to the hourly charts and. See, as we go down, as we go down here, as we move lower on the hourly, the RSI is about ready to break new lows too. So that's it's confirming that this move is got some legs. Question is where would be a good sell? Should we rally back? And my assumption is any move back to 1350. There's going to be sellers waiting, because you have to imagine, somebody who's long, like, just put yourself in the shoes of the long side trader. FOMC kept rates unchanged. Great. I'm buying the euro, right? Last week. Euro spikes up from 113 to 113.50. I bought some euro at 113.50. Great. Making money, everything's good, pulls back to 114. I'm like, dude, I'm going to buy some more. Remember, the Fed's actually keeping rates unchanged. Euro's heading back to 120. This is the attitude last week. I'm buying some more at 114. I bought some at 113.50, buying some more at 114. Boom, we hit new highs. We go to 114.50. As we hit 114.50, now I got a bigger position. I'm like, yeah, that's right, baby. This euro's going to 125, no doubt about it. And then it comes unglued the last couple of days, the last couple of sessions. Now here you are long a nice big position, cost average maybe 114, and you're going, holy crap, this euro is going exactly the opposite of where I want it to go. So now if you're long and you've got a cost average of, let's say, 114, 113.75, 114 and a quarter, where are you gonna get out on any rally now? Well, you're just hoping now this trend line holds, and you're hoping that if the trend line holds and we bounce off this 112 and a quarter, that we bounce back to like 113.50 because you're going to be a seller there. Like, thank God it got back up to 113.50 because my cost average is at 114 and I'll just minimize the loss best I can. So again, you got to put yourself in the shoes of, the person trading on the other side. Where are they looking to exit? Okay. My assumption is going to be around 113.50 because we can't draw a fib and say, oh, well, that 113.50 is going to be a 50% retracement now on a rally back, but we don't know where this low is. We don't know what the low is. We don't know if that's the low. Down here's the low. Down here's the low. Down here's the low. We don't know where it's at yet, so we can't draw any fibs yet. But I'll tell you back. I'll tell you this much: on a rally back to that previous support, you're going to have people trying to get out around there. So if we rally back to 113.50, I'm a seller if we can get it. Okay. Now it is a neutral bias. It's a range bias at the moment. Okay. I don't think we're bullish. I don't think we're bearish. I think we're pretty neutral at the moment. Okay. Smack dab in the middle of the range. So you got to trade it as such. But in my opinion, it looks like the euro dollar is heading back down to 110. Like eventually. All right. So there's your euro dollar support is we've got support at 112 and a quarter, resistance at 113.50. Any rally back to 113.50 seems like a great opportunity to be on the short side. Let's go take a look at the cable. Now the pound's been holding up pretty well. The cable's been holding up. You can see, even with the euro, down 26 pips, the pound is only down, or excuse me, is up 30. So the cable's been holding up pretty damn well today. Speaking of which, let me see something. God, this euro pound. Look at how weak it is. I got asked last week. We were here. Okay. I got asked last week if the euro pound looked like a good short, and I'm like, no, not yet. And you might have remember my conversation. I would rather play the short side as we close in on this like 73 and a half. We didn't quite make it up there. We made it like 73.35 and change, and we rolled back over. But what's most interesting about this euro pound, might be able to play it back on the long side over here soon. Now this, we originally had it drawn up as a flag. I don't think it's a flag anymore. The flag itself is longer than or is more than 50% of the size of the pole now. So buying it down here at like 73 and a quarter probably isn't a bad idea. But I'm not on the long side right now. But that also tells you that the cable upside may be fairly limited too. But here's the pound, okay, and a couple things regarding the pound. If you go into like last week, so this rejection right here was huge. You can see that trend line right through here. That was huge. Also, for the daily charts, the failure on the underside of this trend line was pretty big. Okay, so what that suggests to me now is any rally back to like 156 ish, probably going to find a lot of sellers. Even overnight, we were rallying back up towards. You can see this. We made it to 156.70 basically before rolling over. This area right through here really good resistance. So any rally back up towards the highs, probably going to find some sellers. Even on a little overshoot here. So I'm going to write down 155.65 as being resistance. Support is going to be right through here. Now this is not that red candle right there. That's not valid. Not on my charts. This is a hold on really quick. This right here is this right here is a um, bad print on a Friday. Okay, that's all it is just a bad print on a Friday. As the bids disappeared Friday morning. Okay, or a Friday afternoon, right at the close. So don't look too far into that candle. What I would be thinking at this point is, well, let's figure out where this retracement level is too. Okay, there's a 50% retracement right here, which just coincidence that we went to that. All the support comes in around 154.80. It's going to be pretty good support today if we make it down there. 154.80 should be really, really good support. All right, resistance. We already got it at 156.65. All right, and we're still in a range. Let's go over to the Swissy. Now the Swissy had a really, really amazing rally back on Friday. And I'm still long the Swissy. I'm only up like 4 pips, but I'm in my cost average. But I'm sitting in it. I'm really not worried about the Swissy at all, and the Swiss pairs for that matter. I still have a Euro Swiss long currently that I'm sitting in, and the way I'm looking at like the Swiss pairs is still as a you want to buy it on any type of dip strategy. There's still, wow, look at gold just rolling over, by the way. Holy cow. Did you guys see this? Gold just took a real quick nosedive. A couple of you guys have said my sound is breaking up. Can you guys, is it still breaking up a little bit? It's good now. So it was okay. A couple people said it was a little bit. I don't know what's creating that. A lot of people say so that means it's wherever you're at versus where I'm at. There's a disturbance in the force. Okay, so it's interesting. You get some people. Uh, Yeah, so some other people say, "Oh, the sound was bad," and then other people will say, "No, it's just fine." It usually it probably is there's like a server between where you and I are at, or what servers we're on versus where you're at. Um, so okay, all right. Randall says, "Are people still on DSL?" Probably, Randall. Realistically, um, Anyway, all right, should be fine now. So keep an eye on the Swissy. This down sloping trend line, this is going to be really key, and you can see where that comes into. 97.20, 97. Yeah, by the time we get there, about 97.20. It's going to be really key resistance. I'm going to write that down. 97.20. We're in a range environment. Now, if we can get a dip in the Swissy, you see the dips are very well supported. So any move down to 96.30. 38% retracement is 96.36. We have all those spikes right through here. So any dip down to 96.30, even if we hit new lows, that's going to be an opportunity to be on the long side. So I might actually add to it if it gets down there. Just letting you guys know. Let's go take a look at the dollar yen. So Paulie was thinking that the dollar yen is going to be a good short right up at 120.65, maybe. What do you say? 120.56 is a 78% retracement. So let's figure out what he's talking about. All right, remember we had this Gartley pattern from Friday? That worked out really well. I'm going to remove it now. Okay. Okay, so he was talking about the 78% retracement, and that stuck like a, ooh, man. So there's the 78% retracement, and you know, in case equities continue to rally higher, in case equities rally higher, you got to make the assumption that they will from here, because I don't want to write down this number. It's really close. Paulie thinks that it would be a good short from here, but even if we take out new highs, 120.80, 5 be a great place to be on the short side. 120.85, and this is in a bearish trend. Still is. Keep in mind that, you know, moving below this trend line was extremely bearish the last couple of weeks. And even like what I said on Friday, I'm like, we may rally in the dollar yen right now, and this is Friday's conversation, but it's still bearish. Okay, it's still, this breakdown was extremely bearish. So any rally up to 120, let me see here, 120. I'd like to put in I think an entry order just in case I'm not looking. Like 120.85, that would be a great area to be on the short side if I can get it. You know, I'm going to put in a sell for 120.80. Yeah, I have an order out. I mean, at 120.80 if I can get it. I don't know if I'll be able to get it, but I have an order out there. All right, so there's the yen support. Let's figure out where that's at. You know what? You guys know how I don't like to do this, but It's not a strong enough of a downtrend. Um, I guess we should have some support back down here at 120.15 though. It's not great support, but should have some support, especially for those people that are looking at it as a inverted head and shoulder pattern. That'd be the neckline. All right, let's go take a look at the Canadian really quick. We'll do that one. Here's the CAD. I mean, look at the reaction off the move down here at 130.65. I uh, I remember buying the Canadian on uh, last week on Friday. It was Friday, and I bought it somewhere down here, and then I sold it right back here. And I remember this whippy move, but man, a nasty little. I mean, it shows you just how big the Canadian is down there. Um, I mean, look at that. It's an insane move. All right, let's figure out where support is. I'm gonna be a buyer dips here. So a 38% retracement comes in at 131.50. Let's just mark up the 618. If we get any dip down to 131, you got to be a buyer down here. I would say any dip down to 131, you'd be a buyer. And then resistance is at 132.30. Okay. And we're even though I put us back into a range environment, first time in a long time last week. Last week we were, you know, we went into a range environment when we popped out of this triangle, like midweek last week. Even though we popped out of that range environment, I still think it's in a very bullish trend longer term. It's just, more near term, we've just pulled out of it. So, any dip to 131, I think is still going to be a great buying opportunity, especially today. All right, we'll be back in a few moments. When we come back, we'll do the Aussie, the Kiwi, the dollar index. We'll look at some of the other Nordic currencies. So don't go anywhere. Thanks, everyone. Be right back. Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. As you can see, the euro. The euro is slightly dropping. I mean, we're near the lows of the session. We've been as low as 42. Cable's still holding up pretty well. Swissy's bid up. Not a whole lot happening, but definitely the dollar's firming. The Aussie and the Kiwi, it's really the mostly the dollar against the or the dollar against the euro and the Swissy though. The commodity currencies are still really pretty well bid up here. Matter of fact, I want to take a real quick look, and I want to take a look at this Euro New Zealand because I think this the currency pair may be under some pressure right now, but I'd be more apt to be on the long side of this one. Hold on really fast. And then we're gonna. I know we're gonna finish up the majors, so I'll get to that in just a second here. Hmm. Just really quick. I'm just taking a look at a couple of things. All right. I'm not dealing with it right at this very moment in time, but let's get into the other majors. So let's start off with the Kiwi, or get back to the Kiwi dollar. So here's the Kiwi, and we have some trend line support that comes right through these lows right here. So remember, I was reading Nitish's UBS analysis of the Kiwi. Here's where I would say the bull bear line is. Really comes in around the 63, 63 and a quarter right now. That's probably going to be really good support. If that breaks, I would look at the Kiwi as being a short, against many currencies, I think. But that 63 and a quarter is going to be good support for right now. It is still in a bearish trend. Now, it's in a bearish trend until or unless that yellow line breaks right there. Jared from our chat room pointed out that reversal last week. I wasn't looking at it, and I saw it, and I'm like, man, that is really. He saw it as, before it happened, like when we were here, and I was like, man, that. He goes, I was hoping it gets up to 64.85. He was talking about that, back here, and it never made it up to 64.85. What it did is it made it just shy of that because it was a downsloping trend line, so it just by the time we met the trend line, it wasn't 64.85 anymore. It was 64.60 or 50 or whatever. But that is going to be a big deal on the way back up. Matter of fact, if we can rally back towards that trend line sometime in the next couple of days, I'm going to be on the short side of the Kiwi as we get back up there again, if we do. Okay. So what I'm basically trying to tell you is if we can make a rally back up to here, 64 and change, I'd love to be on the short side of the Kiwi up there. At this point, it'd be 64 and a quarter. Okay. Let's go over to the Aussie. The Aussie downtrend has been neutralized as of last week. Doesn't mean it's bullish either. Okay. It's just been, it's been turned from a bearish to a range environment. However, there was multiple failures last week that really is alarming for Aussie bulls. If you're a bull in the Aussie dollar, you've got to be looking at this being very concerned. Okay. See those very long wicks right there? The failure of the Aussie being able to hold above this this previous support, which comes in at 72 and a quarter, which I think the bigger deal is if you go over to the weekly chart and you take the lows in 2001, lows in 2008, then the underside of that trend line, it comes in around 92 and a quarter. So what I'm trying to tell you is, as long as we stay below 92 and a quarter, you've got to be really careful about being on the long side of the Aussie. You can see the failures up here. $72 and a quarter is what I'm looking at. Any rally back up to 72 and a quarter probably would be a nice selling opportunity. But we are out of the range, out of the bearish trend for now. We're in more of a range environment, but I still think any move back up here is going to be a great opportunity to be on the short side. Now we are making, look at the lows. We're making higher lows, so that means that the support right here is pretty important, which comes in at 140 or 71. Excuse me, and a 71.40. It's a low there, 71.38. So 71.40. Okay, let's go over to the dollar index. Let's go over to the daily chart. Zoom in. Okay, so the downtrend line of this dollar index comes in at about 95. Let's just call it 95.70. Okay. And that is a key level of resistance. It's the same trend line that comes into play right here at 72.25. Okay. We are in a range environment, but man, if we crack that trend line, that's going to put us up towards 97, 98 on the dollar index. Okay, there's a lot of upside here in the dollar index if we start breaking higher. That means if the euro breaks through like 112 and a quarter, 112.10, I mean there could be a lot of downside in the euro down to like 110. Basically, is what it boils down to. Support in the dollar index. I mean, I can write down 94, but we'll find some support before there on the daily charts. Back in 94. All right, let's go over to the peso. Oh, this is a big deal here. It's a big deal. Okay, so for those of you guys and gals that trade the peso, it's really key resistance. 1664. Still in a very bullish trend. Oops, very bullish trend. Okay. I mean, I don't care what anybody says. That's extremely bullish. 1643. Looking at all these levels right through here. So any dip down to 1643 is going to be support. All right, let's go take a look at the Nordic currencies. Wow, look at that. Look at the reaction from support last week. Huge reaction off of support. I don't know if there's anything to do with it right now, but huge reaction off of there. Swedish krona. A lot of support down here. Wow. See that? I'm going to write that down. 830, let's just call it 830, 831.50. We're in a range. We're in a range, but we're at the lower end of the range in a really bullish longer term trend. Support's going to be back down here at 820. Because if we take out that downtrend line, for those of you guys that can trade the Swedish krona, this thing's in a rip. We come through here. All right, so I'm going to write down 820. Okay, so there's your bias chart. Go ahead and copy down that information, and I am going to take